So let us do a question from our past paper. So let me present the past paper. So we are going to do this question for August 2025, question number 4, question number 5C. Do you have capital allowance? There was no capital allowance in this sitting. Oh, there it is. Let's start with this capital. Oh, sorry, this one we did it yesterday. So there was no capital allowance. So the only capital allowance that was there was only the one which was inside this question number 4. Let's go to question number 5. Wambua and Baraza have been trading as Wamba traders, sharing a profit and loss. So their profit and loss ratio 2:3 respectively. The following statement of profit and loss were obtained from the firm's accounting records for the year ended that 1st December 2024. We have the gross profit, profit on disposal of furniture, that's non-taxable income, foreign exchange gain, it can be taxable or non-taxable, depending. That one is, it can be taxable or non-taxable income, depending if it is realized on your unrealized. Compensation of motor vehicle, that is non-taxable. Interest from fixed deposit, that is foreign account. Foreign account is exempt, non-taxable and exempt. We have dividend from investment, gross amount. So investment, that one we shall look if we have any categorization, so that we determine if it is qualifying or non-qualifying. Then you have expenses. Sorry, we have expenses. What's wrong with this? Man, which is the thing? This stuff in a misbehave mbona. Oh, sorry. Ilikuwa wapi? Hapo. So expense number 1, salary and wages. Salary and wages are allowable deduction. We have interest on capital, Wambua and Baraza, those are disallowable deduction. Legal expense is allowable unless read otherwise. Conveyance fee, we are going to do what? Is it allowable or disallowable? Conveyance fee. We have purchase of office equipment, that one is disallowable. Stamp duty on lease agreement 100 years. So we said lease above 100 years is disallowable, Savior. So this one will be disallowable. Depreciation is disallowable. General bad debt, you're going to disallow because it's general. Partner's medical expense, anything relating to partner, you disallow. Donation to non-charitable. Non-charitable means it's not charitable, so that one is disallowable. Additional information number 1. The reported profit include a VAT of 16% on sales, amounting to 69.6. So we need to check the inclusive of VAT. Does it increase our profit or reduce our profits, so that we know if we are supposed to add it back or less. Legal expense, you have drafting of the tender document, that is disallowable. Legal cost on debt collection, that is allowable because a debt that relates to customers. Defending a partner's fraud, that is disallowable. Negotiated back loan, you disallow. Then defend farm against trade disputes, that one also disallow. Salary and wages include salaries to Wambua and Baraza. So salaries to Wambua and Baraza you disallow because those are partners. It's a disallowable deduction. But salaries to employees you allow. Wambua made a drawings of 248,000 with an interest of 15,000 being included in the interest fixed deposit account. So that is disallowable deduction. Interest will affect the schedule, the allocation schedule. We have the general allowance included bad debt written off of that for 600 bad debt written off. Those are specific. The other one we are going to allow. Then bad debt written off, is it allowable or disallowable? Hmm? Then you have commission paid to baraza of 80,000. So anything that is paid to partners, you disallow. That one will be disallowable deduction. So we are required to prepare the statement of taxable profit and loss, and also the schedule of the partners. So those are the requirements. So let us do it in our board. So nimekuuliza bad debt, is it allowable or disallowable deduction? Bad debt. Hmm? Now you can assume if it is specific or general. So if it is specific, you allow. If it is not specific, you disallow. So let us do it here. So public finance and taxation. So August 2025, question number 5. So let us start that question again. So requirement part A, we are supposed to prepare the adjusted taxable profit or loss, and this one is for Wamba traders. So you are going to say Wamba traders computation of taxable adjusted taxable profit or loss for the year ended at 1st December 2024. So Wamba traders. So we say Wamba traders Wamba traders computation of adjusted taxable income for the year ended at 1st December 2024. Now we have a net profit, so we're going to start with the net profit. So what's our net profit in the question? Net profit
19,516,400.
19 million
516,000.
we say 19 million 500
516,400.
then you're supposed to add bank disallowable deduction. So we had bank disallowable deduction. So start with the information number 1. What is information I'm talking about?
The reported gross profit include VAT at a rate of 16% on the sales amounting to 6,960,000.
So let's compute that VAT. So itakuwa 16%. So the reported gross profit include a VAT at a rate of 16% on sales amounting to, so the VAT tumesha calculate, it is 6960. That is the VAT, sivyo? VAT is 6960. Is that correct?
Yes, inclusive.
So the VAT is 6960. 60,000. So 69. So let's just do up analysis. VAT is 6960. Now we need to check, or we need to do analysis of the VAT. So let us do the analysis of VAT. So let us assume we have our sales as 5, I'm at 10. Then next cost of sales. Cost of sales. So we have the opening stock. Let us assume it's the 3. Purchases. Let us assume purchases is 5. Closing stock is 2. So what will be our gross 5, 6, 7? This one will be 6. So meaning our gross profit will be itakuwa 4. Sino kweli? Is that correct? If do 3 plus 5 minus 2, itakuwa 4. Sio iko sawa? Now let us assume now the VAT is on sales. Now what happened when we include VAT for sales? Will the sales be more or less? Itakuwa more. Sino kweli?
Yes.
So itakuwa more. Let us see. So when we include VAT for sales, itakuwa sema itakuwa more. So let's say 11 to make sales to be more. This one I interpret to itakuwa minus 6. Itakuwa 11 minus 6, 5. So what is the effect of VAT on sales? Does it increase our profit or reduce our profit?
Increase.
So what are we supposed to do? We are supposed to less it.
Less back.
So if we less back, that one is, what do we usually less? We usually less incomes. We usually add expensive.
Yes.
So that will be non-taxable.
Non-taxable income.
So VAT on sales is non-taxable income. So you need to know that. So you work a candle. So VAT on sales is non-taxable income. Kama inge reduce our profit, if inge reduce our profit, ingekuwa disallowable deduction. So information number 2. Let's go to information number 2. Legal expense. So we have those legal expense. We have drafting legal tender. We have legal costs on debt collection, defending a partner on fraud, negotiating banking loan, and defending firm against trade disputes. So tuanze ya kwanza, kuna niambia ndio tumalize sura haraka twende zetu. The first one for legal expense.
Drafting of tender documents, that is allowable. How much is allowable?
It's allowable.
124,800. 124,800. 124. 124,800. 800.
Next.
Legal cost of debt collection.
Next. Haraka. Hiyo ni allowable. Next.
Defending a partner in a fraud case.
So we say partner. Yes, this is legality. How much?
328,000.
Next.
Negotiating a bank loan.
How much?
230,000.
Next.
Defending the firm against trade dispute.
How much?
2,200.
5,200. Tumaliza information number 1, sivyo?
2,200, not 2,000.
Next. Tumaliza na information number 1, sivyo?
Yes.
Let's go to information number 2. What does it say?
Salaries and wages include salary to Wamboi and Baraza of 400,000 and 600,000 respectively.
So salaries ya kwanza tu Wambua
400,000.
So that was disallowed for partners. Au mwingine Baraza
600,000.
those are going to disallow. Next is about drawings. So we have drawings. So Wambua made a drawings of 240,000 with an interest on drawings of 15,000, being included in the fixed deposit account. Now drawings is disallowable. Sivyo? 248,000. So drawings 248,000. And then we have next we have general allowance for bad debt, included bad debt written off of 34,600. Now we are going to make an assumption that the bad debt written off is specific. So let's make an assumption somewhere. NB bad debt written off is assumed to be specific. Hence it will be allowable. So tukikuja kwa story yetu hapa, tukikuja kwa information yetu, we have the general allowance for bad debt. So unakuja andika hapa general allowance for bad debt. So uko juu ni ngapi? Let's go back uko juu. Uko juu kwa income statement yetu. General allowance uko juu. Ukienda uko juu ku general allowance for bad debt, ndio hapa. It is 145,800. For our statement 144,800, but we have said, so 144,800, but we have said that out of that, the one which is in the additional information of that 4,600 is the one which is written off. It's the one which is written off, and we have assumed it's specific. So if it is specific, we need to remove it from the one uko juu. So 145,800 supposed to be 145,800 rather than 6,400. Sivyo? We are supposed to do that. So 145,800 minus 34,600. So ndio hapa nimefanya 34,600. So we remove the allowable deduction. So tumesema we have assumed the bad debt which was included inside there is allowable. And remember, we need to only put disallowable. So we need to remove it from that item. So tutasema 145,800 minus 34,600. So 111,200. 111,200. Now mwingine akisema that the bad debt is assumed to be general. So mwingine anasema that bad debt is assumed to be general. Hautatoa, utaweka 148 hapa direct. Just put 148 direct if you shall make an assumption that the bad debt is general. But if you assume specific, then it is allowable. Then you need to remove it. Iko sawa? Next, additional information next. Additional information next is about commission paid to Baraza of 80,000 was completely omitted. Now, even if it was omitted, for tax purpose, we are going to add it back. So commission is disallowable. Even if it was omitted in our financial statement, we are going to include it again. So commission to Baraza, require how much? Commission to Baraza of 80,000. So 80,000. So we add it back. Even if it was not included, commission to Baraza 80,000. 80,000. Haya. Now tumemaliza na additional information. I think the additional information imeisha. So let us go back huko juu for our expenses. So let's start with the first expense. Salary and wages. Salary and wages is allowable deduction, but remember for salaries for partners, tulikuwa tumeweka pale. Remember salaries for partners is disallowable, but salaries for employees is allowable. Now we have interest on capital, Wambua and Baraza. Interest on capital. So interest on capital, Wambua and Baraza. So that is disallowable. Anything related to partner is disallowable. So interest on capital. So kuna Wambua na kuna Baraza. So they are disallowable deduction. So ya ngapi na ngapi? 180 na 250. 180 na 250,000. Then you have 250,000. So any expense which relates to the partner, you always disallow. You always disallow. And then next we have legal expense. Legal expense we have covered. So we have covered legal expense. So that's one we are not going to. That we are not going to talk about it. What about conveyance fee? Conveyance fee, is it allowable or disallowable? Conveyance fee. Conveyance, someone? Hakuna mwenye anasaidia hapo. Conveyance fee.
Disallowable.
Disallowable deduction. So conveyance fee, we are going to treat as disallowable deduction. How much? 128,200. So conveyance fee. 128,200. Sivyo? That is conveyance fee. Next. We have purchase of office equipment. 60,000. That is disallowable. Purchase of office equipment is disallowable. Purchase of office equipment. So that one is disallowable. How much? 300,000. So you add it back also. So add that one also. So purchase of office equipment.
360,000.
Yes?
360,000.
360,000. Then you have lease, 100,000. Allowable, disallowable. Lease. Tunasemaje kuhusu lease?
Disallowable.
Disallowable because it's more than 100.
Yes.
Kuna nini ingine? We have depreciation 736. Sivyo? Disallowable, sivyo?
Yes.
Umesema ni how much? 736.
736,000.
That one is disallowable. General allowance tumeshafanya, sivyo? Then you have partners medical expense. That one is disallowable. Anything related to partner you disallow. Partners medical expense. So anything that relates to the partner you disallow. How much? 52,400. And then tuko na donation to non-charitable. Donation non-charitable. That one is disallowable. Donation to non-charitable. So it is only allowable if it is going to charitable, but non-charitable means it is not charitable. 35,000. Now once we have that one, we can now compute the capital allowance, sivyo? So ndio nimeandika hapo. So tuko sawa hadi hapo? Now we are supposed to less. So less capital allowance, and taxable income. So we start with the capital allowance. Capital allowance. So capital allowance, the only capital allowance that we have here is this one. Office equipment. Do we have any other asset apart from that? Any other asset? Senior peke yake. So let us complete office equipment. I think office equipment. It was a furniture, sivyo? That office equipment, what was it? Imeenda wapi? This one. Nilikuwa natafuta. Ya ngapi? 360,000. So itakuwa 10% or 25%? Yes? 10% or 25%? Office equipment.
They haven't specified.
So tunaona gani? So office equipment, so is it electric equipment or non-electric? So remember kama ni vitu kama furniture ni 10%. That is but kama ni electric, vitu kama computer ni 25%. So we can go with any, whichever you pick. So mimi na 10%. Itakuwa ngapi? 36,000, sivyo? Then we less non-taxable income. The first one is this one, VAT on sale. VAT on sales ilikuwa ngapi? 69,60,000. VAT on sales. Now let's go to other incomes huko juu in our statement. The other income that I can see which is non-taxable huko juu kwa gross profit. Profit or on sale of furniture, sivyo? Non-taxable. Sivyo? How much?
Hatukusikii.
So nasema foreign exchange gain. So nimesema for capital allowance tumefanya that 6,000. Then we are supposed to less the non-taxable income. And from our question, pale tuko gross profit. We have profit on disposal of furniture. That one is non-taxable. Then we have this VAT. VAT on sales, we said it's non-taxable. We also need to less that one. That one. So we had said that VAT on sales was non-taxable. So we are supposed to less it. Then foreign exchange gain. Now foreign exchange gain, we are going to assume it's realized. So if realized, it is taxable. So that tusiweke hapa. So we are going to assume it is realized. So we are going to assume that the taxable foreign exchange gain is realized, and therefore we are not going to include it there. The insurance compensation of a stolen motor vehicle, that one is non-taxable. That one will be non-taxable. That one will be non-taxable. We are going to less it. So insurance compensation. So let me see if we can move a bit. So hapo tunasema insurance compensation on a stolen vehicle is non-taxable. On vehicle. But remember, if insurance compensation was on stock, for stock is taxable for stock, but for motor vehicle, it's not taxable. It is not the business of this company to sell motor vehicle. Ni ngapi? How much is that? Huko kwa swali. 2093,800. 2093,800. Haya, hiyo tumemaliza nayo hivyo. Then you have insurance of fixed deposit. Now this one ukumbuke kulikuwa na income from, there was some income from commission from partners. So partners akichukua kitu, the partnership will charge the partner some interest. That interest is the income to the business. So interest from partners, is it allowable or disallowable? Is it taxable or non-taxable? If a partner analipa interest kwa hiyo partnership of some amount. That was information number. Now for dividend, okay, tunarudi kwa hiyo fixed account. Let's go to dividend. So for dividend, to make our work easier, NB for dividend received is assumed to be exempt. Sasa, so we are going to assume that dividend received is exempt, so that tutaweka tu pale as non-taxable peke yake. Tuko sawa? Nilikuwa nakuuliza this one. Interest from fixed deposit. That one is non-taxable, but we had interest from partner, from drawings. So Wambua made, okay, that drawings is also non-taxable actually. So drawings from partners is non-taxable income. So that is non-taxable. So tutaweka venye iko. So tumesema interest from fixed deposit is non-taxable because it is exempt. It is exempt because it is from foreign account. Natoka outside the country. So we said any income from outside the country is exempt. Is that correct?
Yeah.
We said it's exempt.
Yes.
So how do you treat that one?
Non-taxable.
Yes, non-taxable. So we are just going to exclude them from. So rather than the first one, interest from fixed deposit. Interest from fixed deposit. 150. It's 150,000, sivyo?
Yes.
150,000. Then ingine dividend from investment. Dividend from investment. Wajasema ni gani, sivyo? Wajasema kama
Yes.
kama ni nini. So we are going to assume it is exempt. Sawa, ni ngapi? 200,000.
200,000.
Yeah, there's hapo. We shall get the taxable. And just say taxable. So we shall get the taxable income. Taxable income. And then to add back the specified source in our schedule. Sivyo?
Yes.
So this profit part, was it profit or loss? Year 1916. It was profit. 19. So it was profit. So let us complete that question, and this will be the end of our question today. 19,516, 400. So plus 124, 800. 3 to 8,000 to 30,000. 205, 200. 400,000. 600,000. 248,000. 111, 200, 80,000, 180,000, 250,000, 128, 200, 360,000, 84,000, 736,000, 52,400, 35,000, minus 36,000, minus 69,60,000, 324,000, 2093, 2093, 800, minus 150,000, minus 200,000. So 13, 905,400. 13, 905,400. So remember any assumption that you made. So sisi tumefanya hii assumption. Hii na hii. So you made, remember any assumption that you made, lazima unote somewhere. Sawa sawa. You need to note it somewhere in your books, in your question. Sawa sawa. Ukijibu kwa exam. So any assumption that uta make, you need to specify. Uko sawa? Uko sawa?
Yes.
Aya, sawa sawa. So let us come up with the allocation schedule. Allocation schedule. Tuko na Wambua and Baraka, then total. Tunaanza na salaries. Salaries ndio hapa. Wambua alikuwa anaenda ngapi? 400, 600, then total. Tuko sawa? Aya.
Yes.
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 Next thing we need to consider is, do you have commission to partner? There was a commission, sivyo?
Yes, to baraza.
Sorry, to baraza ya ngapi?
80,000.
Baraza huku peke yake 80,000. Total ni 80,000. Aya. Then interest on capital kulikuwa sivyo?
Yes.
Ilikuwa 15,000 sivyo? Information number. Interest on capital was information number.
Kuko kwa expense juu kwa expense.
Oh, kwa expense. Oh, ndio
Yes.
huyo hapa. Baraza ndio Wambua iko kwa expense. Hata tumeweka pale. Interest on capital ndio hii. Ngapi? Wambua 180,000.
Yes.
Now I'm getting to 50. Total. So 180 plus 250. For 30,000. Aya, tuendelee. What else should we check?
Drawings.
Yes, we are supposed to list index on drawings. Do you have index on drawings? Yes, I think it was information something somewhere, Silvio.
Yes. Information number 4.
Uh-huh. So now you're required drawings.
Wambui made drawings of 248,000 with interest on drawings of 15,000.
So Wambua alikuwa na 15,000. Interest are supposed to do what? Less. Silvio.
Yes.
I think tumemaliza. There's no any other thing. Hakuna kitu kama bonus. So we need to get the share of
Share of profit.
the share of profits. And then hapo chini yake tunafaa kuwa na taxable. Adjusted taxable income, sivyo? Ama taxable income. Let's go taxable income. Taxable income. Sivyo?
Yes.
So what's our taxable income? Kwa nimepata hapa 13,905 400. So we need to get that upper part. Share of profit. How do we get? Ujue ukichukua ile plus huyu minus huyu plus share of profit inafaa kupatia the taxable income. Uko sawa? Ukifanya hivi, let me show you. This is what I mean. Ukichukua pale juu ile 1 million, you add 80,000, you add for 30,000, you less 15,000 because the minus. Then you add share of profit. Nataka kupatia ngapi? Sio kweli?
Yes.
So what will be the figure for share of profit? So about 12 for 10. When you add the 3, inakupatia 1395. Now this one you share. So you share according to their ratio. What is their ratio? Pale juu tukianza. Their ratio tukianza pale juu
2:3.
2:3, sivyo? Tupande pale juu ya 2:3, yeah, 2:3 is the ratio. So Wambua ni 2/5 of 12 or 10 400. Ndio mwingine ni 3/5 12 for 10 400. Iko sawa? Twelve for 10 400. So huyo anaenda na 4964. 4964 160. The other one anaenda na 7 446 to 40. Iko sawa? 7446 to 40. 7446 to 40. Then you are supposed to add the specified source of income. Sivyo? Then add specified sources of income. Now, tumesema hizi zote ni exempt, so there's nothing to add, sivyo? So there's nothing to add because we said all of it were exempt, sivyo?
Yes.
So there is nothing to add. So that you can get now adjusted taxable income. So huyu yake itakuwa ngapi? Una add direct 49. Ndio huyu, sorry, does we need to add? So let us add. Pale ni adjusted. So unaanzia pale juu. So huyu wa kwanza ni 400,000 plus 180,000 minus 15,000 plus 49, 64, 160. Sivyo? Nakupatia 5, 29, 160. Haya, huu mwingine 600,000 plus 80,000 plus 250,000 plus 7446 to 40. 83, 76 to 40. Na hili itakuwa hapa sasa juu, there is nothing else. Itakuwa ni 5529 160 83 76 to 40. So kesho tutana, so tomorrow we are going to do capital allowance, specifically capital allowance. Nilikuwa nafikiria question number 5 it was capital allowance. So kumbe last sitting there was no question for capital allowance, only for farm deduction which were included kwa computation of taxable income. So there hakuna yenye ilikuwa purely capital allowance. Lazima ungefanya na net profit method or gross profit. So that one is it for today. So we can meet tomorrow for capital allowance. That one fine?
Yes.